Hey everybody, still here for the Daily Market Pulse here on Tuesday, February 25th, 2014. So stocks declined some, not a whole bunch. It wasn't much there, but they did decline. It was in lower volume, so it seems like it's slowed down a little bit, at least modestly. Is it over? I don't know. We talked about if the treasuries went higher, what would happen to the stocks? Well, we saw treasuries go higher, and in fact, that chart looks a little interesting. So we'll have to take a look at that more closely, including everything else. Let's go there now. Okay, S&P here at resistance 1850, 1845 or so. Could not break that yesterday, oddly enough. I think we need to advance that, get a new candle. There we go. So we've got a spinning top like we saw in the Dow Jones as well. So it's not able to clear 1850. It's still got a rising 8 moving average. The 20 is starting to rise. The 50 is already rising. So there's strength in the trends. You'd imagine higher and long, but it's got to get up and over and close above. Maybe as high as even 1860, where the high was yesterday, to get a shot at maybe in 1900. But so far, it's not been able to do so. Stochastic still resetting itself as this is kind of in more of a consolidation mode. As I said, volume was down today in a down day, but it's a little bit of an indecision day as well based on the shape of the candle. So interesting. Certainly more downsides possible, but you wouldn't expect very far. 1820 maybe. 1815 as well, where the 20 moving averages, as well as there were some issues before. You see the gold lines across there horizontally. That's kind of where that 1815 currently resides. So it could drop certainly as deep as that, but it'd be hard to believe that it's going to go that deep based on the strength of the trends. But you never know. Things can happen. They can happen very rapidly, and then that would probably be a buying opportunity at that point. So we'll see how it goes. Let's go to the Nasdaq. Okay, so Nasdaq just kind of grinding its way along that upper channel line. Nothing new really there. It gapped up, faded a hair, finished in a positive, but again, a little bit of an indecision, a little bit of a grind. It's all good so far. Nothing issues there. 8 moving average, 42.50 will be the support on the way down. Okay, TSX sideways, shooting star, and then a little bit of almost like a hanging man today. This is looking like, at a minimum, it's profit taking with a possible move to the upside, but could certainly drop back down toward 14,000 to maybe 14,100. So I'd be careful with this one. Over 14.3, I think, you're long again, but right now it's a little dicey. I think the volume is lower, which means it's going to be more like a flag, a little bit more of a profit taking opportunity here with a buy and a dip, maybe more than anything else. Okay, then the DAX holding 9,700 and pushing into 97.13, and you got a hanging man-like formation there. So it's almost in resistance, and when you have a hanging man into resistance, you got to be a little bit of a red flag. It's not quite there yet, so there's still actually room. So we'll see what it does into 97.60 to 97.75. 9,800 essentially is kind of the high area. That remains the target, so there's still another 87 points to that, which is plenty. That's another good size run into that, and then we'll see what happens. But just be careful of this hanging man. Although there's support right here, like I said, at 96.20, and the 8 moving average is there, and you have the other 20 and 50 starting to cross up. The trend appears to be strengthening. Okay, U.S. Canadian dollar had a nice push as we saw, came all the way into the resistance or target at 112, pulled back here into a little bit of support. So let's see what they do here. I thought this might just be a little bit of profit taking for another attempt to go back to 112. We'll see what they do. Today was a good start for that, but not enough. We'll see what tomorrow brings. Treasuries, as I mentioned, had a decent push. It's actually closed now higher than any of the previous opens. You can see there was a series of opens or closes as well, all the way across right here at 133.10. It finally got through all that. Now today, or the after hours, is just kind of pending right there, just kind of hovering. But that's a pretty decent push today off the lows. So it gapped up on the open and then went higher as well. Of course, 200 is still declining, 20 is rising, 8 is rising as well, 54 is rising. So there's still room to meet at 134, even as high as 135. I still see that happening, which gives it a scoop-like formation. I think I may have mentioned this already. You've got this kind of effect right here. That's what I'm looking for, likely. If that's the case, once again, does that mean the markets are down? From what we just saw, it's possible they're looking to fade a little bit. They may not be necessarily proportionate, meaning that as high as this goes, that the markets go down as deep. Doesn't necessarily happen that way, but we'll have to kind of just pay attention and watch it. Okay, Japanese yen, just the same, kind of quiet, very neutral in a what at least appears still a kind of a bullish formation. Again, kind of the same thing as a treasury, but this one a little bit weaker today, in the sense that you're kind of looking for that maybe that kind of scoop-like formation here. 50s flat, as you can see, 20s rising. So there's still some decent strength here, trying to hold the 97.50 level. We'll see if they can get it up back to the former highs, or will they take it down to dip maybe to the 50 before they rebound. And gold continues its trek higher. It stumbled a little bit at 1320. We said that was the target originally until things caught up. It consolidated for a few days. The 20 caught up quite a bit. The 50 started to rise a little further and more aggressively. The 8 moving average crossed over the 200, and then boom. I still think 1360 is the target. I don't see anything else other than that right now. So we'll see for that going on the way up. Now silver made a conscious decision once again to lag. And so there it's lagging. It's still below its $22 mark. And so if it does anything like it did the last time, it's going to blow a top into 23. So pay attention to silver going forward. Now, crude was going sideways. We talked about the 103 level in terms of resistance and how it could easily come back down to 101, and that's what it did today. It just blew to the downside. You see that lower shadow. It ended up closing right back at the 8 moving average, holding it still. So 101 was a support area we anticipated. There it is. The 20 moving average is now rising and very close to crossing through the 200. So I'm still looking for a consolidation that may continue until maybe we see a crossover, in which case you see the stochastics already reset itself, in which case we're going to see the I think crude come through 103 into 105, 108, 110 at some point down the future. But right now 103 to 105 would be the next target, I believe, and I still think that's the way it looks like going forward here on crude. Okay, as always, small caps, very important. Risk on. So what do we see? We see a doji today after yesterday's upper shadow right into that resistance of 117.50. Aren't able to surpass. We know the Nasdaq is through. We know also the Dow Jones and the S&P have not. So here goes the same thing with these small caps. Kind of important. The 8 is rising. Yes, the 50 and 20 are both rising. Now the 20 is now rising, but essentially they're not stacked correctly. But still, there's at least a trend that's going up. As the 8 gets a little closer, we might still see a little consolidation until it catches up maybe toward 116 or even 115 for that matter. Then they have an opportunity to go through, but they have to make a conscious decision at some point to do so. Right now, they're holding still. A doji at these levels typically means weakness, fatigue, and possible reversal. But watch carefully as the trends are still decent. They're still to the upside, especially after that recent reversal. You might expect that this will finally break out above 117, particularly 117.50. So watch for that. It could go either way, above 117.50 or below 116. So keep an eye on that for sure going forward here. And the VIX, of course, not showing any signs of fear that the markets are going to collapse. So they dropped a little bit further. They're still kind of jammed right here between 15 or at least 1450. And the 1350 range where the window is currently support, which was support last week. So it holds there for now. If it just collapses, of course, we'll see the markets aggressively breaking through. I mean, this all may be waiting. It seems like very, very interesting how the consolidation may last still more days, and that happens to take you right into Yellen's speech on Thursday, in 2 days from now. Coincidental? likely. We'll see how that works out. So with that, right now, no fear, as I said, looking for maybe a further drop here in the VIX into support and possible bounce and maybe a chop. And in which case, if that's what's going to happen, that means that the markets are likely to grind higher still.